Hey, what's going on, guys? It's Will. I think we should be live here. Hopefully, you guys are having a good one. It is Sunday here, getting ready for the markets to open on the end of September as a focus today. We got a few things to focus on. Let's see if I can pull up and share our screen today. We can get a clearer outlook. There we are. And we're going to go through some top companies to be watching for this week. Feel free to comment down below with the ticker symbols, the different companies that you're watching right now. We could jump right in, do some analysis for you as we get ready for the upcoming week. Now, what we're going to do this week is have an intense focus on not just greater market direction, but we're also going to look for some undervalued opportunities. And we're going to look is specifically here over in data centers. We're going to be watching some quantum companies along with semiconductors, robotics. We're going to be looking at AI this week as well, as that's been a hot market, the hottest market we've seen, as we're in a golden age right now with technology. So we're going to really jump into the top companies powering the AI boom. We're going to jump into some top data center companies. So these are the companies that are holding all of the massive amounts of compute that is required to run the AI boom. So we're going to jump into those companies first. So again, feel free to comment any ticker symbols down below. We're going to prioritize tickers in the data center market, and let's get into it. So have you ever started to prepare for the week and you found that there are so many stocks to watch that you almost don't know where to look? And I remember when I was first getting started, every Sunday on one side of things, I would be excited, but I'd also be like really nervous and say, oh, what if I'm not focusing on the right thing? How are my stocks going to do? And should I be scared about opening up? I remember I used to get nervous every time the market was opening up. And then once the market opens up and you see either that surge or that big dip at market open, if you're not sure what's happening, it can be kind of crazy, right? So we're going to talk about now what I've learned is what we're going to talk about today, the levels to watch pre-market, kind of the research that goes into the markets ahead of the week. And we're going to jump right into it. So I also want to pull up the live chat so I can see everybody here. The first company on the data center watch list this week is definitely going to be APLD stock. So APLD stock is at $22 a share, and we've been investing in them, covering them here for a couple months, and we're going to jump right into some of the reasons why. But we have basically Marty's here. We got Shanto, we got Carl, we got a lot of people tuned back in. Awesome. And we're gonna go ahead and jump back in here to the stocks. So the first one we got here is going to be APLD. So APLD is one of our top companies in data centers. Now we have a strong focus on this company because they're building the foundations for AI. They're building the infrastructure. So every time that you have a company, it's like people think that NVIDIA or AMD or Intel or Apple, when they decide to build a data center, that they just spawn a data center. It's like, so let's say, just with a snap of a finger, they spawn a data center. It doesn't work that way. In fact, you're going to need to construct a data center. You're going to have to find the right place. A big problem right now, which it's not really a problem, it's more of an opportunity, finding a spot for the data center to be powered efficiently. And when I say efficiently, I don't mean just that it can run computations. I mean being able to be near and hooked into and powered by a source of energy that is efficient. So we're talking about, wind energy and hydroelectric, so turbines, things like that. Applied Digital is the company that the big tech companies go to when they want to build that data center. And Applied Digital constructs the data center. What's going on, Kurt? What's going on, Eddie? So Shaz is here and Dylan is here. What's going on, guys? Hopefully you're having a good Sunday here. So when it comes to the data centers, we're going to be watching one of the top stocks again, Applied Digital. We see them focusing on building for big tech. So Supermicro Computer is going to be one of the top companies they work with. They do all of the racking systems inside of the data centers. So Applied Digital builds the actual construction of the data centers, and they work with NVIDIA and Dell and Intel, HP or Hewlett Packard Enterprise there to construct these AI infrastructure plays. So we've seen them really start to get some momentum, and they're now getting some pulling back after a massive run up into about $27.42. And we saw them sell back down into this level at around $20 a share. So there's a couple levels for us to really identify this week for APLD. And the first level is going to be their support that they have here at about $20.50. It's a previous resistance. Okay, so previous resistance there, $20.50. They've sold back down to it recently, and they're bouncing and continuing to find that support. And we're watching this market open tomorrow morning. We're going to be there, and we're going to be seeing if it's going to validate that support. When the market opens, what we're looking for is validation of that $20.50 level, that it can continue to hold there. And we're looking for this here, this breakout. So why this is a key level for APLD. They've had a very consistent uptrend over the last few months, and you can kind of see if you go back, let's say the last year, you can see them really surge from this market cap up into these levels. And so now that they've pulled back down, if they don't hold that $20 price point that they're just holding right now, then APLD most likely, if they have that previous resistance, they're looking at a sell down here into about $17.50 or below. Now, if that's the case, here's how we position ourselves, right? We have a long-term position on APLD. We might trade, if we see market direction shift, we might end up going to, the inverse of the semiconductor market, the inverse of the data center market for shorter term trades. But for the longer term trades and investments, we're going to continue to hold those and continue to look for the long-term growth. But we are seeing a little bit of a correction recently. So we do have to as a beginner, when you get into the market, almost always, what do you guys see is the number one thing that you always hear from beginners when they aren't understanding. And sometimes they don't even have the foresight to think this. And I used to not think this. But when I first started, I thought that it was because I didn't know how to do technical analysis. I thought that it was because I didn't know how to look at the financials of a company or the news. But you know what it was? It was just having more time in the market. It was just having more time in the market to understand that there are cycles, that we do see pullbacks, that we don't even have to lose money on the pullbacks, but that we have to be aware of market direction. So while we'd like to see this recovery on APLD, and we very well could, we do still have to look for this resistance level that's kind of building, where you see, oh, look at this downtrend. You see this downtrend that's starting to develop from that peak, and we might see them sell back down here in this greater downtrend that's been happening over the last 3 to 5 days. And this resistance level kicks in, they sell down further into that $20 range and maybe even break it to continue down in that downtrend. So that's what we have to watch as well. So overall uptrends, but you see in the greater trend, there's a downtrend, and make sure that downtrend is treated with respect, and that it doesn't just completely break our uptrend pattern and continue down. So be ready for something like that. Now, how do you be ready for that? Same way that if you're trading short term or long term, same way. I was just on the call actually with an investor that was asking this question. And they said, Will, how do I prepare myself when I'm getting to a trade and things pull back? And Casey says, IREN is the real deal. David, it's funny you say that because we're going to look at IREN as well today. And we'll take a look at some of these other stocks. There's another data center stock. I just got a message on Instagram, so I'll have to pull that one up and take a look there. And Shaz is here. Dylan's here. What's going on? Dr. Holcomb, good to see you here. Hey, Josh. And so when you're looking at this movement, right? And I was just talking to an investor and he said, Will, how do I prepare with my short-term trades to not get burned as often? And I said, well, do you play any sports? He said, yeah, I play football. And I said, okay, when you're playing football, what position you play? He said, he says, I played cornerback. I said, okay, I used to play cornerback. I used to play wide receiver. I get it. So I'm like, when you're playing against a really fast guy that's super volatile, super quick, do you go way up in his face? No, you don't. You go further back and you give space. Same thing is true with the risk on your investments. If you have a very volatile stock, something that moves really quickly, even in real estate, but especially here, you want to give yourself some risk management. Maybe that means you're long term and you just buy and hold. Maybe that just means you buy and you hold and you don't really worry about the risk. Maybe that means that you're a little more lenient on the stop loss on the short term. And that's what we're going to watch as these trades continue to develop. It's like, let's see if we can give ourselves, this margin, 5-10% that you're going for. Let's wait a little bit. Let's wait for maybe a bounce down to $20. Let's be a little more patient here, not try and force it, and give ourselves some margin to allow it to move a little bit and see that it's going to make that move before we jump in. So when it comes to the next stock, and we got some really good stocks, you guys are dropping in the chat. The next one is going to be IREN. Now, I've been hearing a ton about this stock, and it seems like it's been getting a lot of momentum over the last few months. And I don't know about the recent news that's come out. I haven't really followed it, but we could start with the market and then we'll get into the analysis and jump into this stock. So the first thing we notice here with this stock IREN, it's getting to all-time highs. So it's surged. You could see it continue to run up all the way to $50 a share, recently pulling back to about $40 a share, and now it's at 42. And so it's in this very consistent uptrend. Now, data centers are getting a lot of momentum. We see data centers continue to grow. And hyperscalers are in the conversation. Benjamin says, Hyperscaler Data Inc., Hypescale Inc., they've just started upgrading their Michigan data center to support NVIDIA Blackwell infrastructure. Interesting. We'll take a look there, Benjamin, at that company. But when it comes to IREN, let's take a look at their financials, and then let's take a look at their company here. So the financial side of things, $11.4 billion. They're making about $180 million in the last quarter. We see them start to ramp up their revenue, and year over year, they're starting to increase. This is ticker symbol IREN. They've seen some increases in revenue year over year, up into over $500 million in 2025 so far, and on track to potentially surge more than that right now. So revenue is up 200% year over year. Net income's up 450%. We're basically seeing all green over here on IREN. So $11 billion market cap, balance sheet, they're holding about $3 billion in assets, and they're holding about 100, or they're making about 180 million a quarter with a positive net income. So even with that, you can see that the PE ratio is still not favorable. So I know that they've gotten a lot of hype. They're in the right market, but we would expect a pullback here. In fact, when we're looking at the trend with the company, you can kind of see the trend. This was probably more aligned with their overall direction of where they're going. Okay. And that the healthy valuation for this company would probably see them sold down back into this level of around $25 a share, somewhere in here. Now, I know that they're now way up around $42 a share, and there is that possibility, of course, that they just continue up. But here's what I'd expect. When we're looking at the company's current balance sheet, it looks like they're in good. Oh, and you see JP Morgan recently downgraded to $24 a share. So that's kind of, again, in that range of where we're looking at $25. So JP Morgan's on my side there. But really what I'm saying is PE ratio looks like it would make sense it sells back down. Now, September 22nd, you could see they doubled the AI cloud to 23,000 GPUs, raising AI cloud annual revenue, recurring revenue target to over 500 million. So they just purchased 7.1 NVIDIA B300s. So these are the fastest GPUs in the world that they can get their hands on, including AMD. And purchasing these GPUs puts them in a position to act as a top company for providing infrastructure for AI. It's a really good article, and it puts them in a good place from a valuation standpoint. It looks good. But again, even with their current revenue, long term, could they balance out and still be worth more than $41? Of course, we could see that play out. Would it make sense? It could make sense. But on the shorter term play of looking where their valuation's at, it would make sense that they can pull back down into that $25 to $30 range. I know it's pretty conservative when you look at it now, but just from the valuation standpoint, we have to consider where their fair value is. And it'd probably be, again, back down around $20 to $25 a share. So next company, we got Giant Pumpkins. Hey, what's going on, Giant Pumpkins? Bravo, what's going on? Chad is here. Chad says, can you check out Grab if you have the time? We're going to jump into the next data center play. And I just received an Instagram DM here. And I've been really getting some, you guys are leveling up on the insights. I get so many good insights from you guys. It's insane, actually, how many insights I get so consistently from so many investors on things like Instagram. And this company here is going to be called, this is from a follower on Instagram, his name is John. And he said, Will, take a look at NUAI. NUAI. Okay, so they've also seen a similar pattern to what we saw over on IREN. So you see how they're way up right now, kind of pushing up into that $3 range. However, they're still around $2 a share. So let me just pull up the financials and get a better idea. NUAI stock. And then let's also pull up New Era Energy here. Okay. So their market cap currently, they are a data center play. They are out of Texas as well. Powering the next digital wave is what their focus is. You could see that they are building out data centers bridging the energy and digital divide, data infrastructure. Okay, you can see Texas critical data centers, so they're working with some of the data centers there on power supplies, on energy rich regions, and their stock currently is trading at $2.15. When we look at their income statements, okay, first of all, urge caution, $47 million. In fact, it would be wise of us to pull up NASDAQ really quick so that I can get an idea of what the institutional holdings look like. And while I'm here, why don't I just pull up Mercatus and get an analysis running there. So NUAI is the company. They're very small market cap again, so I would urge caution if you are considering it. Institutional ownership, though, is not any red flag position where you would potentially see them manipulate back down heavily right now. If we did see a big sell-off, most likely it would be caused not by institutions, but a greater retail volume. Marty says, I'm salty about NUAI. Expand. Enlighten me, Marty. Why is that? I haven't covered this stock before. But I am interested to know, is that you had a bad, you missed out on a good experience? Let me know. What is it? Is it that you had a bad experience, or what is it? Increased position, you got 11 new holders. There are some institutions that would be notable. Bank of America may be holding some, Morgan Stanley, Vanguard is holding some. And let's take a look too at where their financials are, and let's finish up there. So when it comes to the financials over on NUAI, really small market cap, we're talking 47 million. Quarterly income has been low at about $250,000 per quarter, with a negative net income back in December of 2024. Revenue, though, when they look at the year-over-year change, is up 926%. So they've basically jumped up their revenue to $300K, nothing crazy. Net income is down. Let's take a look at the balance sheet. Well, I mean, Marty says I bought at 82 cents, sold at 65, and then it shot up. Well, I will say, while it looks like they're in a great market in data centers, I know that they're working here in the energy sector, especially over in Texas. There's no doubt that there is a little bit of a red flag here on the balance sheet. And that's why I would urge caution again, like most companies that we cover that are under 100 million. And I'll send this over to John so he can get the analysis starting here about 10 minutes into our live, which is their assets right now are lower than their total liabilities. So that's, what do we know? When their liabilities are greater, it means that they owe the bank more than they have. So imagine somebody comes to you and says, hey, can I get a loan? And you say, yeah, okay. How much money do you have right now? And they say, oh, I got 100,000. And they say, okay, and how many loans do you have? And they say, well, I got about $200,000 right now that I owe to banks. Are you giving that person a loan? Probably not. And so when they're a stock right now and they got more liabilities, more debts than they do assets, you have to pay attention. They're basically slightly negative. Okay. Could that change? Absolutely. Could it be a good but risky play? It could be. You know, it's just one that you got to watch from a risk perspective, as they've shot up here. A lot of manipulation here in the past. So the integrity of the company right now, from all the way down, maybe the market might be good, the momentum's good, the revenue's okay, but where they don't have the best growth right now, from where their integrity lacks as a company that I wouldn't personally probably buy long term right now, is that their balance sheet shows more liabilities than asset on their balance sheet. So Two Brothers says, I was looking at NUAI this morning, didn't like who their partners are in development of data centers. They seem broke. Yeah, it makes sense. Yeah, that's kind of what we're playing out there. Now, AI infrastructure is growing really fast, basically faster than we've ever seen. And the data center markets are growing, and we have a lot of companies we have on our watch list, and we're looking at quite a few of them. And we're going to want to make sure, especially if we see pullbacks in the market, right? If we see the market, correcting, things like that, we're going to want to make sure that things are checking out and that their balance sheet looks good. You have to do that. You have to be looking at the balance sheet. All right. So you see a new contract, according to Bitcoin Long says stock, Rigetti stock, the quantum company, got their first 5.8 million military contracts with U.S. Air Force Research Laboratory, advancing quantum computing tech. I think we did see that. And quantum's been growing really fast, as we see. So there's so many movers in quantum, but you do see the financials still lagging over in quantum. But we could go take a look to Rigetti and see if that source is correct. Yep, looks like they did. Yeah, I think we did a video on that last week too. So Rigetti's getting some new contracts. And just because they're getting new contracts, doesn't mean bullishness, because their financials still need to catch up. Rigetti is a quantum computing company that has their current market cap at 10 billion, and their revenue still is basically non-existent. They're at around 1.5 million a quarter, 10 million a year negative net income. Their balance sheet is good. They got the runway, but that $10 billion valuation now, we're just kind of seeing them price in basically and value slide up to levels that they'll probably not be able to maintain right now. That's how I kind of see quantum. Now, again, I'm biased probably because I'm someone that's been holding it. How many of you guys have ever held a stock and it goes up so much that you say, there's no way that it can go up more? How many of you guys have been there? Or maybe you've been on the other side. You've held a stock so much, it's gone down so much, you say, it can't possibly go down anymore. How many of you guys have been there? In the chat, let me know. Because I'm in Rigetti right now, and when I first got into Rigetti, and we were trading it back around $1 a share in the quantum space, we started covering it back in October last year, and we were in Rigetti. I remember that when it was around $1 a share and it went up to $3, I was saying, oh my gosh, it's up to $3. It can't possibly go up more. Now, of course, we've held some, and we do have a position right now, you can see on the right there, that's up about 200%. And this recent surge we saw up to $32 a share or $34 a share. So maybe I'm biased when I'm looking at it and I'm saying, oh gosh, there's no way that it can go up more, right? But at the same time, we got to realize that people are just figuring out this whole AI stuff. And they're saying, what's the computing power next? Where's the computing power going? Oh, we're having problems with that. You need 1 million. Like, we're just looking at one of the data center companies, IREN, and it said they're purchasing 40,000 GPUs or 40,000 basically tiny computers. And the question is that the best way? Can we, rather than buy data center infrastructure for thousands and thousands of all these computers, could we have it run with a quantum computer that is going to be able to solve more problems faster and bigger problems than having thousands of GPUs, and you could do it with just one quantum computer? And that's what people are saying. That's why we see a focus right now over on the quantum market. And I will say that while that's the focus and investors are looking at the demand for AI and they're saying, let's buy into more quantum and let's be positioned for when this stuff continues to power the AI tech, that there's one thing they're missing. And I wish that every quantum investor would just go to a conference or something to talk with the scientists and all the people that are doing it, because there's two things that happen. The first thing that happens is you talk with the people there, and the initial reactions that you see are some of these people don't believe in what they're doing or don't see how far things could go because things have been going so slow for so long. That's basically what happens. So that's the first thing, is you talk with these scientists or you talk with these people in quantum, and quantum has been going so slow for so long that to them it's like a breaking of their belief systems to believe that quantum could take off in the next year, 2 years, 5 years. So I'd use it and compare it to like meeting someone that, let's say, when the dot-com boom came and it absolutely rallied and went crazy, there were people before that dot-com boom that had been working on stuff in the internet for 5, 10, 15 years. And when the dot-com boom, right before it was about to happen, they were thinking to themselves, oh, it's going to be about how it's been the last 5 years or 10 years. And the dot-com is just going to slowly rise and we're going to see slow adoption here. Because that's what they had seen for 10 years. But then the dot-com boom, and there's these certain people that come into the tech and they say, oh, this is happening fast. And look, we're innovating here. And boom, everybody's saying, oh, we just onboarded 1 billion people in a month or something. Then all those people are shocked and they're like, oh my gosh. So there was that part of the quantum where people don't realize the massive surge. And I see Paul Henry's looking for SoFi. Paul's looking for AMD. He says data center. We could take a look there. So that was the first thing, is a lot of the tech scientist people, they didn't believe that it can grow fast here, quantum, because of how it's gone. Then you meet some of the other belief systems of people that are on the front lines, and they're saying, this is fundamentally shifting technology, and we're going to see this massively change how AI is going to be integrated with our computers, and this is going to allow us to solve massive problems very fast, and we're very close, or we're already doing it. And so the other side of it is but it's good to see both sides, is what I mean, because you can also see the people that are doing it, and you could see what they deem as explosive growth and what they're maybe downplaying as well, that actually is really big. Like, I'll give you an example. Like, QBTS was giving a ton. So when we went to the QBTS conference, they were giving a ton of emphasis on, our partners here, and we're working with Boeing, or we're working with Ford Audison, or we're working with this company. And did you know this about quantum and this and that? And they had this tiny little, 30 minutes thing on cloud, tapping into the cloud for these quantum computers. I'm so excited because this is what I was thinking. When they said that, and they were talking about, they were like, oh yeah, and also we're adding, the cloud where you can like use our quantum computers over the cloud. And anyway, but then there's this thing, and I was like, whoa, hold on a second. That's exactly what I'd want to do. Like, I'm thinking, oh, wait, that's where the boom is going to happen, right? And so I think there's just a few levers that need to get pulled for quantum to be a mainstream thing that you see play out right now. And part of it is going to be, like, imagine we have 10,000 people or more that tune into our YouTube channel every single day. Did you guys know that? Did you know we have over 10,000 people that tune in every day? And when I come here and I do an analysis, for example, on, let's jump into the next one, AMD stock, and I'm using let's say OpenAI, because this is our new platform, Mercatus. It's the machine, we call it, and it's doing the analysis of the charts, the financials, the news, It's tying all the relativity to the next month. It's looking at the press releases. It's looking at all the stuff that I would have to go look at and that changes probably almost every day. It's looking at all that stuff for me. And in about 30 seconds, boom, you get a projection for the stock. Okay. So let's give it a second as it's kind of loading up here. And if you haven't seen this ever before, okay, it's loading up. Give it a second. We can choose these models. And so give it a second as it loads. And people tell me, Will, now I'm using Claude, or, oh, I'm going to use Grok. Or they start using the machine and they say, I'm using the machine because I want Gemini to do the analysis for me. I want Claude to do the analysis for me, or what have you. And let's see if it updates here. I'm looking for it to update. It's taking a little bit. And so my point is, imagine that we add QBTS here, and QBTS Quantum is tapped in through the cloud with an AI model, and now it's doing the research. People are going to be looking at that and say, ooh, well, I know OpenAI is good. I know Grok is good. QBTS is the quantum computer now performing the analysis. That's going to be a big deal. So there's like these use cases that compound crazy when you have things like the cloud get introduced for quantum computing. And so we got to watch carefully, because it could very much be this exponential curve. So I bring that up, knowing that we just reached all-time highs, knowing that we're seeing a little bit of a pullback to this rising support on most quantum companies, that yes, in the near term, we could maybe see a pullback, and we got to watch these levels, but maybe, just maybe, there's a compound effect that's hitting the market that we could see things really start to continue up. So that's kind of the focus. So there's some great comments here. Real Estate with Darius says everybody's sleeping on GPUs. Thinks IREN is most likely going to do better. That's good ideal. Gemini or Eddie says, love the machine you have. Awesome, Eddie. I'm glad you love it. Yeah, I've been using it almost daily. So as you can see, we got AMD stock. We're going to pull up AMD right now. So let's go over to data centers, AMD. Marty says, oh guys, the tunnel is complete for the Vegas tunnel. That's going to use Tesla transporting people through the tunnels from airport to casinos. That's good to know. I know they've been working on that for a while, so that's good. Okay. All right. Where did that come? Are you saying buy Tesla stock, or where's that coming from, Marty? BSMT says, how we doing? Popping in to say hi. What's going on? Good to see you. Thanks for tuning in. So here's what we got over here. We're going to get into that red wire, Shaz. Appreciate you. And Steven, thanks for tuning in. When it comes to AMD stock, we jump into the data center market. AMD right now, we'd like to see them continue up into that, 165 to 183, continue this overall uptrend that we've seen them really start to build, and continue up like this, right? Make this run into highs as they have seen recently. We do see them still, though. This is where we watch them have a resistance level. So they are at a current resistance level around 165, and we saw them get rejected here slightly. 160 basically, and they're getting rejected. And in this consolidation, possibly could sell down to about 149 or 150. When we're looking at the machine and getting some analysis from OpenAI relative with our, it's looking at all the press releases and all those things, the SEC data, the institutional holdings, insiders, all that. It looks like it's projecting another 3% down here over the next day or so. When we go over the next week, it's maybe saying about 1.5% down, but then probably, let's see, over the next few months, still a little bit negative on the bear trend. I'm not sure exactly why that is, and we'll have to pull up Grok. I've been really using Grok a lot. I want to see what Grok has to say, as they're probably looking at the PE ratio. So in the near term, you got a resistance at 160 for AMD. We could potentially see them sell back down to this $150 range, as they have rallied recently from $75 back in April up to $186 by August and in July. And then they recently pulled down here, kind of consolidating between 150 and 160. So when we're looking at the information that we got for AMD, there's a couple things to consider. The first thing that you really want to know is they're not just in the data center play. While they've continued to get more investments from Apple and Google and what's the other big company they're working with? They're working with Tesla. They're working with Microsoft on the data center side of things. They've continued to double down on their data centers, and their revenue has seen massive increases. Broadcom and AMD are set to share this much of the $475 billion AI chip market. You could see revenue has been up to about $8 billion a quarter and increasing year over year. So they're up to $25 billion in 2024 and on track to do more than that in 2025, probably over $30 billion this year. So revenue's compounding at 30% year over year. Now, when we looked at AMD, it's not just the data centers that they're really doubling down on and building more of with their GPUs. If you search up AMD, you'll notice one of our videos is the top videos here. AMD is providing the microchips for Starlink. So I'm really bullish on Starlink. I think I'm bullish on most things that I use, like the iPhone in my hand, or, the MacBook that we got here, or the Tesla, or whatever is in our real life, real world usage. We usually have this bias and interest in it that we want to invest in it. So AMD is powering Starlink satellites, so internets from space. And if we're running this live session on Starlink right now, that gives me some confidence. How's everybody's connection? Is it doing good? Right? Those are questions to ask when we're looking at this company's real world usage. So they got good financials. Their PE ratio is a little high still at 91, but it's improving. And they continue to build out. They just recently acquired, here's an article. They acquired this company called Brium. And Brium was accelerating inference. So how Brium is shaping the future of AI across GPU architectures. So if you know nothing about AI, just know this. There is the GPUs, like the computers, and then there is being able to run software on them very efficiently or run AIs. And so on the left here is Brium's technology running an AI and getting a response. And on the right is the common SG-Lang, which is, usually runs like ChatGPT or what have you. So on the left, they're running much faster and getting a response from an AI using machine learning here much faster. And so basically what happened was you could see this demonstration where they're outperforming a very popular, very powerful inference on the right. Okay, so they are outperforming it. And so AMD said, hey, let's buy this company. We're gonna buy them. So AMD acquired the AI software company Brium. That means that they're positioned well to jump into things like ChatGPT or jump into things targeted at being, a company that has AI available to consumers or business to business, or maybe even for their own business that runs faster than most other AI. So I think that was a nice acquisition for AMD. And that's why, as we see them at the 160 mark right now, and we see the market pull back just a tad bit, we're going to be looking for the bullish play would be breaking back above 160. Okay. And then looking for support at 160, to continue this trend up into 175 to 180. That's about a 5 to 15% margin for profit on AMD. And then if they can't hold that 160, if we see them sell down at market open, something like that, we do have to watch as the next level of support is at 150 or 149. So we'll watch that with AMD. But overall, data centers, if you're looking at data centers, you're looking at AI infrastructure. Long-term play that I have and that I hold is AMD. And if you're looking for a long-term play that is competing with NVIDIA, AMD is most likely going to be one of the top companies that you find when searching for a company that fits the bill there. So Drilly says, can you look at EVEX? We got NVTS. Marty was looking for semiconductors. We could mix it up. Have we looked at EVEX last time, or did we write that one down? I think we looked at that one last time, Drilly, and that was on Friday. Or it might have even been yesterday. Let's see. So EVEX, they have been kind of selling off here. They've kind of found a support potentially. Let's take a look at the company. I'm not really sure about this company. I don't know anything about it right now, so I don't know how helpful I'll be. 1.34 billion market cap. Not a lot of hype, which is good. Revenue showing signs of no reporting. So hard to get a grasp, at least on the balance sheet there. Maybe I can pull it up in Mercatus and get a better idea. We'd want to pull up. I don't even know what Ryan has added recently with our widgets on the financial side of what we'd want to watch here, but I'll pull up some financials on the company and get an idea and see where things are at. EVEX, or we can kind of give a test. Let's see. Google wasn't able to source the financials on the revenue for this company. Let's see if we can source it. Oh, we did. All right, so Mercatus right there, everybody saw it. We're sourcing information better than Google in that financial outlook. The only thing is the information is updating like every 3 seconds, so it's showing like a loading sign every 3 seconds. That's a bug we'll have to fix, but hey, that's good. Okay, so let's take a look at their current income. All right, so financial investments, cash equivalents. Let's see, the assets look good. We see their assets slightly more than the liabilities, it looks like. Yep. And that looks fairly bullish. It looks like they got some runway. Looks like from the operating expenses are a little bit high. Okay, and we're looking at from a net income perspective, they are negative. Net loss here, about 138 million. So they're not making money. And I can't wait to put this into a really nice, beautiful UI. Right now, it's just all the data. So if it's hard to follow, no worries. We will have this a lot easier to kind of follow. I'm kind of just like looking at all the numbers and then kind of sourcing it together for you. But what we're looking at here from the income and where we see them at right now, we're not really seeing any growth. Okay, so what I would expect with this company, EVEX, they don't have much equity. They are having a negative net income, losing 64 million. It looks like their market cap's at $1 billion with a negative net income, and they're working on these like EVTOL set, or it's like an EV. I think it's an electric. It's an EVTOL. They're developing a human-centric design for this interesting like flying machine, and they would like to build more of them. And currently they are raising money. Okay. So it's up to you. You know, startup wise, if we saw actual revenue, they would have my attention more. Most of it is all computer generated images, slightly cool, also slightly a red flag when you see things like that. When everything is like computer generated images, I would rather see a real image of a real plane. Like, is that the real thing? How it actually looks? Because that's way different than what we're seeing in the 3D generated stuff. You know what I mean? Like that, it looks way not as advanced as what they're showing in these AI pictures. So, you know, you got to kind of look at those things. Those are some red flags. Not necessarily that they're intending it for it to be bad or that they're trying to deceive, but just from a factual standpoint, if you want to get the best facts on and know that it's legit. I don't see any like new contracts, new deals that they're getting. They did get a $15 million grant there, but there wasn't any like deals other than raising money where they're seeing revenue. So while they might look exciting, they recently IPO'd back in 2022. You see them start to sell off, build a little bit of downward momentum. And it almost looks like a support there. Super high risk, probably one that we wouldn't look at into deeply, truly. So hopefully that's helpful. You know, again, like I just pulled the stock up, so I don't have like a really deep understanding. But I mean, if I had to say whether or not I would potentially invest in it, I'd probably say no right now. And hopefully that's helpful. Sam says, hopefully a good week this week. How about this, Sam? How about it's going to be a great week this week? I'm always working with Sam. Sam and I are always talking about belief systems. I remember Sam, we were on the phone after, I think you got into StockMate, I believe. And we were talking and he said, yeah, you know, I can't do this because I can't do that with my investing. So I don't know if you remember, I was literally about to get on a plane. And I'm at the airport and I'm talking with Sam because I call all stock mates, people that join our daily live trading sessions or want the targets, which we're going to be dropping later tonight. There's a community here of about 400 members of investors that are top investors. We got over 24 millionaires here, and they all get a free t-shirt when they join, and they all get a call from me or my team to really see where they're at, gauge where they're going. And I remember I'm talking with Sam and he says, yeah, I can't do this because I can't do that. And I said, Sam, how can I do this? How can I do that? You know, it's so funny how much people grow up hearing the words I can't and no and this. And it makes you think you're stuck, man. And I'm not saying that's exactly what he said, but people get stuck that way. And so Sam says, hopefully it's a good week. Saying it's going to be a great week. It's going to be a great week, Sam. It's like the try, never try. Oh, if you're on our team in our company and, for example, we're adding, I could literally show you because I was just talking with Ryan because we were working on this new feature for Gemini. So I can search up Gemini. It's going to do the deep analysis. And it's the premium model. But when we go get the premium model, we got to connect it. We got to connect it here. Then we got to feed it all the information that we're going out and sourcing. As I've mentioned, we source like SEC, insider data, press releases, all those things that the models normally wouldn't be considering. We're fueling the models. And Ryan was saying, man, I'm trying to fix this, and I'm trying to fix this, and I said, we don't say that word. We don't say I'm trying to do. We're going to do it. And then if it doesn't work out the way that we want it to work out, okay. All right, so we had the intention of doing it and then it didn't work out. And now we're going to do it again. You know, you get the difference. Like the difference is the positive and negative expectation will literally change the outcomes that you have. It's tremendous. So when it comes to the DUOTs, D-U-O-T, I think we got through most of semiconductors. There was one semiconductor that was talked about here in the chat, which is NVTS, Navitas Semiconductor. Looks like last time we were doing analysis here on NVTS, we're looking for this move here potentially up into that $9 range. We did see them validate that support level that they have here around $5.50 a share. So to see them hold that $5.50 range is important here as they're consolidating from left to right. Now, NVTS, how many of you guys have heard of that one? They're a semiconductor company, and they got some tech partnerships here, and they're working in an interesting market that, well, a really fast growing market, but they also have revenue that was increasing year over year. But the last 2 quarters kind of dipped a little bit with negative net income. The only thing that looks really good for them, their balance sheet. They got almost $500 million in assets with only $60 million in liabilities. So they got plenty of runway to continue to run right now. However, the other thing that they were doing, I think, were 3D images of their semiconductors, which is okay, but I would like to see some new real photos. Real photos go a really long way. Press releases. Let's see what they recently came out with. See if there's anything new. So they're a semiconductor company. They enable AI and tech to take place, as this is the hardware that powers a lot of the technology all around us. Navitas Semiconductor names Chris Alexander as president. They haven't had any new contracts really come out or anything like that, or new deals. Maybe PSMC. Not really seeing too much new. So I'm still not a bull on NVTS. I think they've been manipulated a little bit. They saw a big surge up to $10 a share. But again, they're kind of consolidating between about $5 a share and $9 a share. It's possible they make that run and continue up, but I do think that they've been manipulated a bit and still not seeing the revenue kick in. And I would personally wait until they come in with some good revenue on maybe their next quarter earnings or something like that before we invest more. So hopefully that makes sense. So Keystone Giant Pumpkin says, you're an average of $3.86 on Big Bear. That's awesome. Yeah, Big Bear AI is a company we've been covering for a while too. They have a tremendous foot in the door right now for TSA technology. They're up about 2% here Sunday night, getting ready for market open tomorrow. And we see them get a lot of momentum over the last few months, really pushing up back up into that $8.50 range before pulling back down here. We were looking for this bounce at $6.50, back up to about $7 a share. So we're going to be watching at market open tomorrow, see if they pull back, maybe get a good play there. Chuck Norris says RZLV earnings is on October. We will have the earnings. There's some targets coming out, Chuck. I don't know if Chuck, if you're in Stockmate, but we'll have some targets coming out as we do every week for all the companies that are reporting. Kind of looks something like this. The different companies, their current price, our targets, along with when they're reporting, pre-market and after hours over in Stockmate. But we'll also get some insights, throughout the week publicly on YouTube. Of course, you can always tune on in. RZLV is one that hasn't seen good financials. In fact, they have more liabilities than they do assets. So they're a company that has not seen a clean balance sheet at all. But of course, they're in a nice market of AI. So we will be watching those earnings to see if they can clean it up, maybe come in with some better balance sheet plays. We would never trade it right around earnings. Just doesn't really make sense. It's one of the hardest things to predict when it comes to short-term trading. So we won't do too much there. But yeah, we'll definitely be watching this week. Okay, so the other one that we got, and we got one more, root for one more, aside from that Big Bear kind of support and resistance we went over, we got Redwire. So Redwire is going to be in the space tech market. Pretty similar kind of analysis with Redwire. Redwire's had some really good deals recently, signing $20 to $30 million deals over the last 3 weeks and getting some new contracts in the space tech world. When I was able to meet with them at a conference in Colorado Springs, I noticed that they were expanding fast and that other partners they worked with that I talked to had a lot of good things to say about Redwire. I talked with Air Force Research Laboratory, along with some other companies that are doing space tech, and they had some good things to say about Redwire. Big Bear AI is also partnered with Redwire, so that's an interesting play there for kind of like the Golden Dome. Redwire's had revenues also increasing. Quarter over quarter, you see them get up year over year. They're increasing 24% in revenue year over year. And they also have a really nice balance sheet. They jumped to 1.5 billion in assets with their total liabilities under $500 million. So currently more assets than their current market cap. So we're going to watch here, kind of similar than to Big Bear. They have a support at $8.50. They're looking to make this run back up at the $9.50. If they can't hold or where their nearest support again would be $8.50. When the market opens, we'll have a good idea of their movement. Why they would move really is just continuing to build space tech. The space tech market is growing, and we see them now at a low after pulling back from highs back in February of around $25 a share. They're now down and kind of beat down around $7.75. So we are just kind of watching as they maybe find a breakout from this consolidation from left to right, start to make their way back up into these levels of $12, $15, $20 a share. But how we're going to trade it at market open, we're probably going to look for moves. If any opportunities present themselves, we'll be watching as we always do at market open. I appreciate you guys for tuning in. If you ever want to join us there in our daily live trading in Stockmate, it's the second link in the description below to join. We do have a special sale for the AI boom, and I think you can find it there. There's a coupon, and it's in the second link below. You get access to our community. You get access to our entries and our exits that happen every morning. You can see our plan, and I'll even send you a free t-shirt when you join. So outside of the daily live trading sessions you also get a free t-shirt when you join Stockmates. So would love to see you there at market open tomorrow. It's pretty early, 6:30 a.m., but we'll be there, a little nicer on the East Coast. And we're there every day, Monday through Friday. It's private. It's not here on YouTube. It's on a separate live, private live stream that you get access. That's not a public YouTube video like this. And you get an email each morning with a link to the live session. So you want to check your email, as it will come out about 15 minutes before the market opens, and you can jump into the live that we have there Monday through Friday at market open. Appreciate you all. I hope you have a great rest of your Sunday nights. And if I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you guys in the next video. Thanks for tuning in. See you guys. Have a good one.